As of now, the sentiment for IndusInd Bank has completely swung 180 degree. So when there's euphoria, it's time to exit. When there is fear, when there is selling, there's excessive fear. So let's do a reality check. Let's address all the concerns with the management of IndusInd Bank, which currently are bothering markets and what is floating around in various forums and WhatsApp groups. Romesh Sobti joins us now, Managing Director and CEO with IndusInd Bank. Mr. Sobti, good morning and thank you for joining us. Well, our viewers do know that IndusInd Bank stock has suffered, but I'm going to use this forum perhaps to address all the rumors which are spreading about IndusInd Bank. So let's talk about how much of the rumors are facts and how much of them are fiction. First, is IndusInd Bank interested in investing in Yes Bank?
Sure. I think we have given a clarification last evening, Nikunj, that which is a letter addressed to all shareholders, which we have sent to the exchanges, where we have very clearly said that we have neither considered, especially at management and board level, neither considered nor evaluated any such sort of a proposition. So I think these are absolutely unfounded rumors based on a passing remark relating to the fact that it could be a good investment. But as far as IndusInd is concerned, I repeat, we have clarified that we have neither evaluated nor considered any such investment.
We understand that there are other private sector banks who have shown keen interest to invest in Yes Bank. Why are you not inclined to do that, and what are the chances that you may change your mind tomorrow?
No, each one takes its own decisions. So, what is happening now is also all speculation. So the plan is unfolding, and I think the final truths will come out when I think RBI and SBI announce those plans. So I think at this stage is all sort of speculation. As far as we are concerned, our stance is pretty clear.
Promoters of IndusInd Bank, when I say promoters, Hinduja family, if they decide to do that, we don't know yet. Can I imagine that would be a separate transaction and that's got nothing to do with IndusInd Bank if that happens? I hope you'll appreciate my question, but I just want a clarity on this issue.
Because I think they are best placed to answer that question themselves. But of course, there's an arm's length and complete arm's length sort of a situation between the promoters and what they do and the bank. I think they were better placed to answer that questions.
I hope you'll appreciate my curiosity. I just wanted to clear air on this one. Okay, let's talk about a concern which could be called as a broader slowdown concern, which had hit IndusInd Bank last year and now continues to haunt the stock price right now as we speak. Concerns on your exposure to vehicle finance, concern on your exposure to a lot of HNI accounts. Is it business as usual, or you are feeling the heat of economic slowdown and the impact of coronavirus?
Nikhil, I'm glad you asked this question because I think we have clarified more than once over the past few quarters that people talk about these three sort of books. One is vehicle finance, the microfinance, and the diamond financing. As far as vehicle financing is concerned, I think our performance has stuck out very nicely. Our performance has been better than industry, both on the growth side, also on the quality of the book side. The credit cost that we have seen on our vehicle finance have been extremely sort of range bound and well within the parameters that we've seen for almost 30 years of financing this particular book. So I think the book is behaving nicely in the circumstances, and the data that we have from rating agencies very clearly shows that we are far ahead of industry in terms of the quality of the loan book as well. The second one is microfinance, where also occasionally things sort of bubble up in the media especially, or rumors. The first half of the year, we know that microfinance was slower because of the issues of floods in a few states, and of course that particular typhoon or cyclone in Odisha. The second half has come out very strongly. Growth has returned into the microfinance sector. Collections are in the vicinity of 99.6 or 7%. The credit costs remain very, very sort of range bound, and in that 30, 35, 40 basis points, which is pretty good for this sort of industry. So the concerns were more around growth, and of course 1 or 2 states where we have no presence at all, up in the northeast and things like that. So that book is now going apace, and I think the quality is pretty decent. And the final is this, odd sort of thing that pops up now and then on the diamond financing side. That book is as close to being pristine as possible in the lending space. And in spite of all that has happened, even for instance in China or Hong Kong, etc., we have found that we don't have a single day's overdue in that book. So I think that book is one of our prized sort of books, and has been extremely well managed because of the quality of the customers that we have. So I think this is to put at rest any sort of speculation on the quality of these 3 books. They have behaved pretty nicely. Otherwise, I would say that there's business as usual as far as we are concerned, both on the lending side and also on the liability side.
Sure. On the deferment of the AT1 bonds, Mr. Sobti, just to understand, do you think that sent the wrong signal to the markets?
No, not at all. I think you only have to look at our declared balance sheets to see the position of our capital adequacy. I mean, Q3, we showed a capital adequacy of 15.4%. And the market knows that there's a subscription to preference issuance that happened during the merger with Bharat. That has to come in, and that will probably take it well beyond the 16%. We keep looking at, we have a threshold and some sort of guidance, informal guidance from the board, that you should keep that threshold on capital adequacy, and it's a very high sort of threshold. If you look at the position that we have today, we have enough and more capital to generate a loan book in the vicinity of 20% or more for the next 2 years. So it's not that you need capital, but we have this threshold issue, and we keep topping up now and then just to meet the threshold, which is the informal guidance from the board. So, I mean, we thought we will raise some money to keep that threshold. The market changed, and we don't need the capital. We said we'll defer it and wait for better circumstances to do that top-up. We are retaining our profit, most of our profit, and that generates almost 70% of the capital we require every year. So capital formation within the bank is also pretty strong. So I repeat, we are pretty strongly capital adequate. We don't need capital for the next 2 years, but we have internal comfort to sort of keep a threshold on capital adequacy.
All right, Mr. Sobti, just in terms of the kind of scenario we're looking at right now, the kind of fall we've seen in banks across the board, just the, on value proposition that you feel there is at IndusInd, and even as an investor, if you're looking at anything else in the market?
In terms of my personal investments or investment from the institution?
As an institution. But I'd be happy to hear how you're reacting as an individual as well.
No, I think we are focused on No, I think in turbulent times you stay put as an individual sort of investor. As far as we are concerned as an institution, we remain focused on our organic growth plans. We have finished a planning cycle which ends in March, and we are about to sort of present to our board the next 5-year plan, which we call Planning Cycle 5. So we remain focused. We stand on strong capital adequacy. We stand on good liquidity. So we remain focused on organic growth.
All right. So focused on organic growth there. Just in terms of, and I think, Nikunj touched upon it, but in terms of the committed amount of capital from the Hinduja family, does that remain? And even in terms of the Citibank pledge, again, does that also remain? Any changes that we need to know
Yeah. See, Citibank pledge first, I think the clarification letter came from the holding company. We have given to the exchanges. They are better placed to speak about it, but it's a 3-year-old sort of facility. There's no additional pledge or anything like that. It's a very small percentage of this thing, probably used to raise liquidity for other activities. But I think that clarification they have to give, the group has to give itself. And the other question was on, one was pledge, what was the other one?
The Citibank pledge, of course. And also we are hearing that NHAI has pulled out about 15,000 crores of deposits after the Maharashtra order. Is that correct?
No. There's no truth in that. There's another rumor sort of flowing out. There's no truth in that.
All right. Just before we let you go, Mr. Sobti, when do you see relief, for bondholders?
Which bondholders? Are you talking about a particular
Yes, I mean, given the shake-up that we've seen.
Or generally on bondholders?
I mean, given the shake-up we've seen post the 81 deferment and the uncertainty there's been a lot of nervousness in the market.
Yeah, I think that is a very instance-specific sort of issue. I don't think so. That's a larger issue of 81s, etc. But let's see how that issue gets resolved. One is, of course, the technical solutions and the rights that are embedded in a 81 sort of a bond. The other is, of course, the interests of the investors. And I think this is a test case on how that solution will be found. So that there is no sort of residual litigations and things like that.
All right, Mr. Sobti, we'll leave it there. Thanks so much for joining us this morning with those clarifications.